All right, so we're talking about real world assets and particularly on Chia. We've got a project that we've talked to before, Solomon's Lot, but they've made some significant progress. So we thought we'd have another conversation with Matt. So Matt, welcome to FOMO, and maybe you could just start by giving us a quick introduction to Solomon's Lot for people who haven't had a chance to check it out, and then we can get into some of the most recent developments. So tell us a little bit about
Yeah.
Solomon's Lot. What are you guys doing?
Yeah. So, first of all, thank you for having me back. It's great to be on the show. Soulslot.com is a fractional real estate marketplace. There's only a few out there. Um, Unlike Lofty AI or some of our competitors, we do not focus on rental properties, but we really focus on actually fractionalizing the rights in the property, and we focus on purchasing interest in the property at a discount. So people make their money by buying, a sticker price discount on a home, just a fraction of the home. And when the home sells, they make their return based on how much the home appreciates and how much of a discount they got off of the value of the home at the time they purchased their interest.
And as far as where the company and the entire project are at, you guys have had a few transactions that have already happened, right? These are known as DACs, I think, and when people refer to them, is that right?
Yeah, so we've kind of considered where we're at right now as a protocol, right? So testing the fact that it works. We did have success with over $50,000 in, you're 100% right, DACs, we call them, digital assignment contracts. And the reason we called them that is one of our advisors was pretty much like, hey, you need to name it something that no one else calls it. You need to, really make the point that, hey, this is something new. So a digital assignment contract is exactly what it sounds like, right? So digital assignment contract is an assignment of interest in an original agreement. And so we plan on having we're hoping to do about 70,000 more dollars in DAX before the end of the year. And then next year, we'd like to bring on 50 properties at least, um, and really, start expanding and blowing this thing up and taking it into retail. But we've had a good success with our proof of concept and our bootstrapped business.
So when you say that, I mean, it's fully launched and you guys have been doing it. So the transition or what you're describing is just expanding the number of properties that are being brought on, or is there additional functionality that you're still angling for that is the threshold?
Yeah, so on our roadmap, well, we have three big things. One, which we'll release with our next set of DACs, and that's fiat. So we integrated with Stripe to where you can purchase this DAC, which is essentially an NFT, for with your bank account, so with an ACH payment or your debit card. Um, the way we were able to do that is by building a Rust driver that creates an escrow wallet, which is simply, a basic wallet SDK using Rigidity's Rust SDK to move the DAC into escrow based on the Stripe webhook command of the checkout being completed, and then move the DAC either to the end user's wallet that was connected when he purchased with Stripe, when the Stripe webhook tells us the transaction was completed, or the funds processed, or send it back to our wallet if the funds are canceled. So being able to create a fiat on ramp was one of our number one priorities this year. We were super happy to get that accomplished. We believe that combined with better discounts on properties, this will allow people to essentially on ramp into Chia. So the logic is that, hey, you've got a 20 or 30% discount off of the retail value of this DAC. You go ahead and you buy, $1,000 or $2,000 worth of it with your bank account, and then you immediately relist those DACs for, 2-3% higher than what you paid, maybe 5% higher, and someone else purchases those with XEH or stablecoin, and now you're essentially into the Web3 ecosystem without having to go through Aerodrome, and without having to go through, Change Now or Crypto.com or something like that. So that's our first big goal. Our second is going to be a automated listing platform, essentially allowing homeowners to, click a sell now button, go through the entire underwriting process, automate the appraisal, automate the inspection through APIs, and we hope automatically mint their own DAC collection for their property at a discount that they choose. So, a lot of market tools that we would have to make available on the platform where people could choose their discount threshold. I only want to see properties that are discounted up to 12% off the market, and then our last big push would be the SoulsLot wallet app. So we want to take our marketplace platform and turn it into an app where you can buy real estate directly on the phone. But the app also has an option to install like a Rust wallet as well. So instead of having to use Wallet Connect like everyone else, you could actually just have a native wallet built into your SoulsLot app. So those are our three big pushes that we think will allow us to have the demand for these stacks that would allow us to get the 50 properties live next year.
50 properties live on Solomon's Lot and a coming app. I'm pretty excited about that. That sounds like a lot of cool work for the development team, definitely.
Thanks.
Yeah, I get excited about the thought of owning a piece of fractionalized property and being able to list it on Dexy and to resell it in the meantime. Matt, what was the time window from the offering of I know you've done at least one property. I'm not sure if you've listed more since then, but on that first property, what was the time window from the listing of the DACs to the sale of the house?
Yeah. So on the first one, they went live late June, and everyone was returned or paid back with a 13, almost 14% return in just over 3.5 months. Some people it was less because the DACs were sold over a period of a week and a half, 2 weeks. Those DACs were each $475 and returned $540. The fun thing about that is some people actually saw 50% returns because they purchased with XEH. Now, this isn't XEH or Chia terms. Chia dumped. So that was something really crazy. Chia dumped 30% over the course of, 4 or 5 days when we sold the DAX. So we absorbed a lot of that loss for the users. And then when they got their $540 back, they were able to buy a lot more Chia because the price came down from $24 to $12 or whatever. So people were reporting, 50% or so returns. The second ones, we
Wait a minute. Let's stay on that for just a second. Help me understand the dynamic here. So Solomon's Lot is in some way playing in the futures market of Chia, and you guys are susceptible to price moves in Chia, and you said you absorbed the loss. Tell me a little bit more about that.
So the homeowner in this case is an entity that I own with the founders of SoulsLot. So we already have these properties and we put them up on the platform to test everything and subsidize returns for the market, prove that it worked, and make sure that we were insular to risk. We didn't want anything going wrong on our first few, right? We don't want anything wrong going, period, but it was a good kind of sandbox for us. So Cedars, our real estate company, sold these DAX and XCH, and then we have to then go convert that XCH to cash, to pay developers, do whatever we want. We used a lot of that as essentially contribution back into SoulSlot to work on the platform. So when we receive that XCH, we have a question of like, hey, we've got $20,000-$30,000 of XCH sitting in our real estate company's wallet. What do we do with it? Like, do we sell it? And back then, I was of the mind that, hey, we don't just immediately sell all of our XCH because Aerodrome's liquidity was very low. I mean, we were having like 5% slippage. So there wasn't a really easy way for us as a Tennessee corporation to legally sell a large amount of our Chia that we knew of. So we were selling it off in parts. And I think there was like that, maxi hodl mentality, like, and then it dumped, and then there was a lot of sell it all now. So I think we actually lost, $5,000 on that spread, which who cares? Like I think we made it up a little bit on the second one because the price tripled the night we listed our second DAX. So the cool thing about our second property is we sold 20,000. So we wanted to make the DAX cheaper, $208 each. And those sold out in 24 hours. I think about 30 or 40% of that was purchased in XCH, and XCH went from $12 to $14 to $24 literally overnight. So there's this really spectacular moment where we went live. It was actually on my birthday. Bram and Gene hopped in our space on HOA Town Hall. It was, no one expected it. And then that's kind of what kicked off all those spaces. And then that night we woke up 10 a.m. Saturday morning and $150 million in liquidity had came into Chia. And people, were jokingly like, oh man, had I just held that Chia instead of buying those DAX, I wouldn't have, I would have made more money. We're like, yeah, but last time we lost money. So there's definitely some market conditions that go into this when it comes to accepting Chia for real estate. And I don't know how many like true homeowners, like retail homeowners, will accept Chia for their DAX, but there are solutions to allow that in the future as well.
I mean, it seems like the simple thing is to just price it in a stable, but is there some reason why that isn't like the go-to answer, or what?
We do that. Yeah, so on SoulSlot, you can buy directly on SoulSlot, and I believe majority of people on our last run actually did buy. We prefer people to buy directly on SoulSlot because of the disclosures. You're going to get the due diligence information. A lot of people like the sweep feature. They just want to go and buy on Dexy, and they want to buy 5, 6, 7 DAX at a time. And we get that, right? We wish you could buy, add 5, 7 DAX to your shopping cart and then check out and combine that offer. We just don't have that technology yet. So on our website, you can purchase in WSDCB, which majority of people did purchase in, right? And we also allow people to purchase in XCH. And I believe we're finished with our bot that updates the XCH price every hour based on the spot price minus like a little bit of slippage. But really, it just came down to the fact that the community was like, we want to buy with XCH because farmers and a lot of users just have a lot of XCH that they can't really do anything else with except hodl. And right now, we haven't seen incredible price swings that really justify, not, if someone has a, 10,000 or 20,000 XCH, well, using 20 or 30 to kind of hedge, right, in real estate, that seems to be the consensus. Now, yeah, they could go buy their stablecoin with the XCH, but it doesn't make a difference to them, right? They have XCH, they can go buy some stablecoin with the XCH and then buy a DAC, or they could just buy the DAC directly with the XCH.
Yeah, so it's sort of just lamenting any particular trade. It's like, oh, why did I do this trade when I could have done that trade? And nobody's that prescient to be able to figure that stuff out ahead of time. So some of this is, just
Yeah.
I wished I'd have known Chia was going to rip 3x. I would have bought that instead.
Yeah, you want to have a diversified portfolio. 80% stock, 20% bonds has kind of been the old mantra. Maybe you do, or 60-40, right? Maybe you do a similar 80-20 portfolio where, sure, you're 80% in Chia, but you're 20% in something more stable, and maybe not just a stable coin, but we believe real world assets are a great option because the risk on the downside is pretty mitigated because it really comes down to, the real estate market collapsing, which we don't see happening. And if our product went mainstream, we actually think it would help prevent it because
so that's an interesting question. So in a place where the real estate market is collapsing, like there are parts of Florida where we're seeing this, right? Where home prices have, declined by something 30-40%. I think that there's parts of New Mexico that are going through this because there's, I don't know, shortages of water or other types of reasons why this might be occurring. Does Solomon's Lot have a play where there's like a significant downturn in a market? Is that something that you foresee, or is it kind of irrelevant to what you guys are building?
No, for sure. First and foremost, like underwriting standards, like what we put on the platform has a lot to do with that protection. I'm not saying that there won't be downside risk on anything, or, that goes on to Solslot. That's obviously going to happen. Secondly, I personally believe, and a lot of other people have the same sentiment. A lot of economists, especially real estate analysts and stuff like that, believe we've already seen the aggressive downturn in real estate. So we're excited because, and I hope Chia is in a similar boat, we're entering into, kind of our big push to expand in a time where rates are coming down. Prices have already bottomed out, right? So here you go. Like they haven't been this bad since 2011. Well, 2011 was literally practically the very bottom of real estate prices, right? They could fall more, but
well, it's kind of a special. It's kind of a special case in Florida, though, right? Because they've been battered by these hurricanes. The insurance situation is getting increasingly difficult. I think that there's a couple of major home insurers that have pulled out. I mean, I think that there might be some amount of suns and moons and planets aligned. I mean, this is clearly is not a something that's happening across the nation. I tried to just reference those two places since we were talking about, well, does this work in more unique situations where maybe that market is encountering something that's really bizarre. I definitely don't think we're seeing across the board real estate collapse, except maybe in commercial. Maybe that's a nationwide thing.
Yeah, and well, the Southeast and Texas, Austin, for example, Louisiana, all of those markets are actually feeling similar things to Florida. And what's interesting is now the Northeast is the opposite, but in these markets, there's this sentiment that, hey, if I keep lowering the price, maybe someone will buy, right? But no one is buying. So lowering the price isn't actually doing anything for anyone. No one's going to buy at a $10,000 discount. No one's going to buy at a $20,000 discount. No one's going to buy at a $50,000 discount. People will probably buy after Trump gets inaugurated because this is just an animal spirits thing. So what we're running into is people who need money, right? That's why they're lowering their prices so irrationally, and can't sell their house. Well, let's say that they could sell it in 6 months or 8 months, right? And they've listed their property for 500,000, and their realtor says, "Hey, if you want to sell this thing, you need to discount it 100 grand right now." Well, that homeowner would lose 100 grand um, tomorrow. And what we would say is, "Hey, let's take 10% of your home worth 50,000, and in the abysmal case, let's discount it to $25,000, right? Now you're losing 25,000. The DAC buyers are returning doubly, and it's going to give them the liquidity to say, hey, you know what, this is going to afford me to wait another 3 months, 4 months into March, when rates may come down, when Trump's policies may inflate housing prices back up, instead of just trying to sell their property in a really bad time. So we
So
believe
and
our
then
product.
does that resolve at closing time then? You've got to go resolve these DACs that sit out there and then pay those creditors off essentially. Is it almost like a lien on the house in some sense?
It
Like
is.
a mechanics lien? Okay.
It's either, to some know it as a trustee's deed, a deed of trust, or a trust deed, right? So it's called a performance deed of trust. And essentially, it's a deed of trust with a trustee securing what's called a forward sale and exchange agreement. So that agreement that each DAC holder has assigned interest in is secured on title. We do not allow the homeowner to owe more than 80% loan to value. So if it appraised for 500,000, right? They could only be in debt up to 400,000. So if they owed a $300,000 mortgage, we would come in at a second position, and they could have an up to $100,000 debt. Now that's not how much money they get. That's how much interest in the property, the Solomon's Lot, which is a group, we consider it a group. Solomon's Lot and or assign is the context. So the homeowner, if they were at a 50% discount, just for easy numbers, could receive 50,000, and Solomon's Lot would secure that $100,000 position. And then any additional debt or lien that they received would be inferior to that performance deed of trust that's protecting everyone's interest.
And Matt, you've talked about essentially time windows going forward, 3 months, 6 months into the future. Can the forward sell exchange agreement be pegged to, instead of a window of time into the future, a sell price into the future? Like you can set up the contracts to be open until the housing market comes back up to a certain price.
Yeah, I'm sure you could do open-ended deals like that. The thing that's nice about a forward sale and exchange is we didn't invent it. It was invented in the 70s, and a lot of hedge funds and pensions have a huge appetite for it. They love the product. It's also called a co-investment, or a home equity investment, or a home equity agreement. We don't want to modify the
Wait.
agreement
When
too
you're
much.
saying they love it, I'm thinking of the credit default swaps and how much they were loved. Are we going to suddenly hear about, Matt, at the maelstrom of the next the next real estate crisis?
So the reason they love it is because, in my opinion, mortgage rates are unfairly high. Their credit and debt and the cost of debt is not fair to the American, in my opinion. It's not fair that credit cards are 20+%. And in my opinion, it's not fair that, a lower income borrower is going to qualify for a 7+% mortgage. And what that did is it forced people not to, like, they couldn't get any more debt, right? Like, if someone really needed to access capital out of their house right now because they were in distress, they couldn't. Um, and what's really crazy about the forward sale and exchange is, first and foremost, it's not a loan. It's qualified, based on the total debt of the borrower not exceeding a certain percentage of the value of the house and the condition and value of the house. What's so appealing about this to the hedge funds is that they're buying at a 50% discount. It's called a 2x exchange rate, and they're also getting the appreciation of the home. So they're like, okay, none of these people can qualify for this high rate environment. The home equity agreement has been heralded in as saving the HELOC market, the home equity line of credit market, saving the second mortgage market, and allowing borrowers and homeowners to access capital that they normally wouldn't be able to get at the expense of trading half their home away. Now, these terms are usually 10 years, and they do have a clause in them. Ours don't, but the traditional home equity agreements that are being bundled up and securitized and sold to hedge funds do have a 20% annualized cost rate limit, right? So essentially, at best case, these hedge funds are doubling their money in 5 years. And that's at the expense of homeowners that don't have any other option. Well, our first discount, and people were very happy with our discount, was 13.6%. And we thought our second discount was only 10%. So we are 5 times cheaper than the hedge fund product because we have a secondary market where people can enter and exit, right? They can hold that DAC, and if they really needed to sell it, they could sell it. Well, a pension, once that stuff's securitized, they're not getting paid back until the home actually sells, right? They don't have a market where they could, trade this interest in the property back and forth. If they did, it would drive up that parity price. It would drive up the discount. So we came in and we said, look, we'll offer a better deal for the homeowner, which is still a better deal than retail ever has access to. So it's like this, because we have the blockchain, we find this moment where not only does the consumer, the homeowner, get a better deal, but so does retail. Like, retail is still shocked that they're able to get such a large return in a shorter period of time, and the homeowner is shocked that they're able to get so much money in the time that they need money.
Kind of sounds like what you're doing is stepping in and eating the lunch of the banks.
That's what peer-to-peer is all about. Peer-to-peer
Eliminate the middleman, squeeze out the exorbitant profits that some particular individuals have been reaping, and normalize the market.
Exactly. And there's this community focus where we're distributing the loss too, right? So when a homeowner is having hard time selling their property and they need money now, well, like I said, instead of discounting their $500,000 house by $100,000, why not just get $25,000 now and return 35 or 30 when it sells, or get 50,000 and return 60,000 when it sells? That's still a 20% return on a short time horizon. Now, if they went to the banks or the big companies offering this, they would get a much worse deal. The other reason why this works is because the person who buys that DAC doesn't have to sit on it and wait until the home sells. Like, if the homeowner's like, you know what, I don't want to sell right now, I want to sell in a year. And the DAC holder's like, okay, well, if I'm stuck with this DAC, you need to discount that by 50%. Well, what if they weren't stuck with the DAC, right? Would they be okay with a 30% discount, right? Because someone might be fine with making 20% in 2 years. So if they purchase the DAC at 30% and mark it up, right? So that's what we want to see. We actually want to see DACs synthetically appreciate in value, where that discount just gets smaller and smaller. Because right now, the truth is that anyone buying a DAC is like a sniper. Like, these guys are practically DAC day traders. When they see a deal that's so good and they immediately buy it, the smartest thing for them to do is to relist it at a lesser discount. It's still a discount off of the fair value. And then some slower investor or more passive investor, someone who maybe has a retirement account, can say, you know what, I'm fine with that 10% return in 8 months. I'll buy that DAC at the marked up price. Maybe someone says, hey, you know what, I bought this DAC, I shouldn't have, it was my rent money. I'm going to discount it even more than the original discount. And you'll have people come up and buy those distressed sales too. It's no different than any other asset that's being traded, except we're in incredible price discovery right now.
Yeah, that is really it's beautiful to think you talk about Solomon's Lot as being a tokenized real estate, but it's you're creating a market, a true market. So
yeah,
that's incredible. And you said
Not only that, Lucas, but they're edging in on like places where the banks have traditionally been almost the only player. I mean, who else
yes.
would really be doing this?
Yeah, if it's not the banks, it's private lenders who are just as aggressive in their rates, if not worse. You know, you might have to get into a balloon mortgage, or you get into payday loans, right? Where do people go when they need access to capital? All they have is their house, and they can't, you know, their income doesn't qualify them for any more monthly payment.
Well,
So
so,
the
so
reason,
when you talked about your big development activities, it almost seems like there's a big side of this, and because it sounds like there's a bit of a two-sided market here, because you need to get listings, so people who need money, and then people who want to provide that money and make a return on it. So is part of the push here to actually get a lot more properties listed? I know you said 50, but like, is the push, it's like, hey, instead of a payday loan, check out Solomon's Lot. Instead of blah, check out Solomon's Lot. Is that where you guys are at? Like, just trying to go out there and push for people that need access to cash?
yeah. So what's really fun is I run a traditional real estate company as well that buys houses. We have a realtor that lists houses. So to answer that, second half of the question first, our big push will be to market with postcards, right? Hey, have you thought about selling just a fraction of your house and then doing a referral, or have you thought about selling your whole house? Well, most people who've been on the fence about selling their whole house are probably a great target to convert for selling just a fraction, which is practically everyone, because no one wanted to sell in this high rate environment. But if they do want to sell their whole house and list on the market, then Soul's Lot can get immediately to revenue by getting a kickback or a referral fee from the realtor who lists that house. So that's our go to revenue strategy ASAP. The reason why we didn't want to dump a million properties onto the platform, or just call everyone we knew or knock on every door in town and say, hey, you want to do this, because I'm sure we would have gotten yeses, is because we want to prove the product. Because when the product is proven, it's better than any other fractional real estate platform out there. Grant, you had this, like, you pulled up that Zero Hedge tweet that was showing the bubble pop or the deflationary crisis in real estate rental prices. First of all, in my opinion, that's a good thing, right? I want to see it cheaper. I want to see it less expensive for people. I don't want people to have to pay crazy amounts in rent. I own rentals. I saw this coming. That's why I didn't think that making a platform where you could buy into rental properties was a good idea. I was looking at our competitors, Lofty AI's website yesterday, and almost every single one of their properties, when you click on it and you look at their token charts, the tokens are going down. Some of them like fell off a wall. So whereas launching a rental property site in the speculative boom, they came out. So here's something interesting. They came out in 2021. We know that was the boom, right? Well, what's it going to look like now, right? How are these rental properties going to hold up in this market? Because people are saying it's never been worse. It's as bad as 2008. It's as bad as 2011. We're launching in the worst of times instead of the best of times. I mean, 2021, I could have, made money in real estate and worked 2 hours a day. They graduated from Y Combinator 2021 with $125,000 in bootstrapped capital. By November of 2021, they raised $5 million for this platform. The reason I said 50 properties is because after that $5 million raise, they put 50 properties on their platform. We think that this is a small, rental properties are a very niche market. Single family rental properties are about 10% of all properties out there. Well, what about the 90% of the people that actually really matter? We don't need to continue to be exit liquidity for these portfolios, because that's all it is, right? People are literally exit liquidity for rental portfolio owners, and maybe not very good rental portfolio owners. Once we prove that our platform works, we can go from A class, right, the very cream of the crop, best of the best properties at great discounts, and we can slowly start adding more and more.
When you say cream of the crop and best properties, is there some sort of a rating system? I'm thinking somewhat along the lines of when the carbon trading came online on Chia. There were projects, and the projects were described in a certain way, and it was fairly easy to introspect what you're buying. I'm imagining some kind of a rating, like this is a AAA property in some fashion, and there's a disclosure that's associated with it. Is that the kind of thing that you foresee when you're talking about the differences in quality of what you can buy into as far as DAX?
Yeah. So one of the things that we have to do is we have to underwrite, we have to get an appraisal, but we also get a broker's price opinion, and we use what's called a house canary evaluation, which is probably the best prop tech company out there. It's called an agile evaluation, and it's an inspection mixed with a broker's price opinion. It'll show risk of decline. It'll show a confidence interval for how confident they are on the price. And I would say that confidence interval is what really matters. You know what I mean? Like, if I'm going to buy interest in a property on Sol's lot, and they're saying, well, it's worth 300 according to this appraisal, but I also get this confidence interval and it says, yeah, we think it's worth 300, but we're only 85 or 90% confident. That doesn't sound great to me. I want to buy something that's within that 97% confidence. So that means there's a lot of comps. It's in a dense neighborhood. Prices, are pretty stable. It's not a rural farm property. It's not some vacant land. It's in a city. So that's where we want to start. And not only that, let's say we want to bring on $1 million to the platform. Well, you can do that in two ways, right? You can go find one $100 million apartment and list 10% of that. Or you can go find 20 single family houses and list 10% of each. We would want to concentrate our efforts in our underwriting into higher end properties that yield more per property than trying to willy-nilly race into the middle class single family houses. Now we want to be able to offer that product to them, but we're still in that proof of concept phase. And if we're going to spend 3, 4, 5 hours, 7 hours of due diligence on one property, we want to concentrate that effort into providing a large amount of liquidity onto the platform with one property instead of 10 properties at first. Now, that's not always going to work. We'll still see plenty of single family houses and stuff like that, but that's kind of our thought process.
So do you foresee some of these reports and these ratings and these sorts of things attached to the NFTs, to the DAX themselves through some mechanism like data layer, or is that not really needed because it's all centralized within Solomon's Lot, the platform itself?
Yes, yeah, I do see it being attached in something like data layer. Creating chains of information immutable on the blockchain is 100% one of our goals. And being able to offer that service to others as well as a tertiary product is definitely something that we talk about internally.
It kind of sounds a little bit like what Gene was talking about when he said, hey, title really should be on chain, because then you could build upon previous things. It almost sounds in some essence of a similar type of concept where the data that was produced at one point in time then is immutably referenceable, and the context doesn't get lost. You don't necessarily have to start over on what you might do on the assessment of a property.
Yeah, and it's actually a lot easier to display in the UI. We love Dexy's API, we love Mint Garden's API, Space Scan's API, and being able to just query, hey, when someone clicks on this NFT, just pull all the data layer information related to that NFT and display it in this design. That's going to save us a lot of uploading and injecting documents or links into an SQL, right? Like, the more we can link to the NFT, the easier it actually is to dynamically display it in the UI of the website.
I really view this as kind of the prototype for what Web3 actually looks like. It's transactions married with data on an immutable data store. These are really powerful things. I don't know that we've really seen this happen substantively on other chains. So this really kind of, you guys are doing some interesting stuff that's only been theorized about or been discussed at a high level, but here it is, like, happening right in front of us.
Yeah, I think that it really boils down to the fact that I got to be a student of all you guys, and I mean, you guys, Grant, Lucas, Rusty, but also everyone in the Chia community. The kind of questions, conversations that I've had with people over the past 2-3 years, like, for example, I talked to Gene about this idea 2 years ago, 2.5 years ago in Miami at the Bitcoin conference, Miami meetup, the Chia meetup. And I told him, hey, this is what I want to do. I want to do this automatic redemption thing. And Gene said, yeah, we can totally do that. And he was giving me ideas then. I actually submitted for the Chia grant that November just to get my foot in the door. And it was 2 years of talking. So it's the kind of stuff that you guys know is possible that we say, hey, that actually is a great solution for real estate. Um, Real estate prop tech is kind of the short bus of technology companies. You don't see a lot of great property tech come out, and you definitely don't see a lot of great blockchain integrations. And I think it really just comes down to the fact that the real estate community is insulated from the blockchain community, right? Like, you don't have a lot of real estate guys that are willing to go and learn development or listen to blockchain guys, and vice versa, right? Like, I come from a statistics background. I come from a numbers and an underwriting background. I come from a sales background. Door-to-door knocking is how I started my business. You go out and you work 12 hours, 14 hours a day, and you don't complain. You do it every day, and you say, I'm going to work the next 90 days in a row and just, rub it in everyone's face. And it's a very cocky industry that hasn't jived well with blockchain. I think that if people were able to communicate across industries, especially across the blockchain industry, a lot better, we would have seen a lot better technology. So I've done my best to just listen to everyone, even though most everything that everyone said is just way over my head. But I get thrilled. Like, I get an adrenaline rush to think about being the first title on the blockchain, the first solution that a title company can integrate into, the first solution that makes title insurance cheaper. But no one could do that without communicating with y'all. Like my business partner, Rogue, he's not nearly as, he's not integrated in this community like I am. And all of his ideas sound fanciful. I'm sure you hear plenty of people that come up with some idea, you're like, yeah, that would never work. And then they don't even want to listen to how it actually would work. They just want to go tell other people about how they think it would work.
You know, Matt,
Definitely. I mean, there's a lot of fanciful ideas out there about how things can work, and but there are solutions and there are things that can be done, and I think that's why when we're sitting here just kind of tossing back and forth what the future looks like, this just simple idea of marrying data and transactions together in a way that's immutable, it's got ramifications that I think the world really hasn't seen, and so it'll be cool to see all of this stuff kind of come into more fruition in 2025, because it really does feel like the work that you guys have done on the early phases of Solomon's Lot in 2024, that putting 50 properties out there, just exploding this thing, getting access to more money for people that have their home as their primary asset and want to go out there and explore something different than some kind of predatory payday lender or the banks. Like there's a new game in town.
Yeah,
Yeah.
Matt, when I ran into you, I don't remember what room it was, but you talked about some of these ideas that you had, and then you said, and we've almost built it, and you were at the threshold of launching Sol's Lot at that point. I think there's so many people who reach for, how do I put this? The low-hanging fruit of DeFi in some way, but actually drawing in the most important asset that most people can get their hands on, their home, is the foundation for actually giving for people allowing to them for giving people the ability to use blockchain to be their own bank. So I'm glad to hear that the launch of the first couple of properties went so well. 24 sell out in 24 hours for, what was that, your second property? That's
Yeah.
a sign that people are beginning to grasp what you're talking about here, and I hope that you get lots of interest as far as people listing their properties also with you.
Yeah, I appreciate it. I think that the most important message I've got today is that, well, first and foremost, I've been very closed door about my relationship with Chia Network Inc. I've gone through a long and eventful period of due diligence with them. Chia is probably the most conservative investor I've ever met. They dug into everything, just ripped everything apart, and we got the green light. Now, nothing major, but we are starting to receive term sheets, and very small, nothing major, nothing huge, monumentous, but we've got the green light, and we've had other investors reach out as well. So what's really cool is we think that we could have a really strong Series A in May. And when Gene talks about being able to list company equity, or the IPO will never be the same, we want to be the first. I want to be the very first serious company that IPOs compliantly through Chia's system, and I want to be able to make anyone who invests in the company through that process, or in a pre-seed, reach out to us if you have thought about it, or Series A. We want to make that return huge, and we think that we're at the point where it's only up from here. We have people that have been absolutely financially destroyed through the rate environment, through the end of the debt cycle, that we think our product will help ease as we go back into the cycle. But most importantly, we have every single contractor that we could possibly need, every advisor, every person we would need to build this company right on X, right in the community. Whether it's someone who's a background in, you know, financial engineering, or Rust or Python or anything. So we think that it's not only something that we get to build and talk about together, but it's also something that we get to collaborate on. And we hope that, you know, alongside Chia, you know, we can make some of the very early adopters huge returns on a platform that we think really will take over. You know, it's not like we're not pushing to blow this thing up. That's not what we do every day. Every day we push to stabilize, invest more to the back end, the development. But when we push to really blow this thing up, we hope that the people that get to hop on board with us, you know, do very, very, very well, because that's my dream. Like, I want to be able to give back to this community, because, you know, this is the community that literally gave me so many ideas, challenged me in so many ways, and has continued to be an open door. Like, we were in a 5-hour spaces last night with Rigidity. Like, that's so much fun. You know, I'm sitting and I'm coding, or I'm just working, and I get to hang out with people that, you know, I would call true friends at this point. And I don't know, I guess I thought it would be a lot more lonely. But, you know, I really do owe the community so much, for being such a welcoming space. We've all been through a lot with Chia, that's for sure. So yeah, and I appreciate you guys for hosting FOMO consistently. Like I said, I've gotten a ton of ideas out of it. I'm so glad to be on it. Last time it was one of the best platforms for me, so I definitely hope to, you know, be able to help promote you guys. And I'm very grateful to have, you know, such a thoughtful room.
Well, remember us when you're on Tucker. But
yeah, I'll shout you out, Lucas, and you can hold me to that, because I say really, really silly things and don't have great foresight. So if I ever make it there, because you said that, I'll definitely shout out FOMO. I mean, hopefully this is an interview that, you know, kind of has a lot of things that hold me to the fire too.
All right. Well, great conversation today. And Matt, thanks for coming on. And we will definitely continue to watch the project as it moves forward. And yeah, we'll see you the next time when there's another update. We can check in with you again on FOMO.
Yeah, I'm always happy to come back on. Thanks so much. Who do you guys have coming up next, or what's the schedule look like?
tomorrow we are going to have a member of a fan of Craig Wright's to come and talk to us about CSV. What is that Bitcoin chain? Anyway, we're going to have an interesting guest on tomorrow. We ran into him in a space who was wanted to tell us about Craig Wright's, and we thought, in the wake of our digging into the identity of Satoshi, maybe we ought to listen to another side or perspective there. So it should be an interesting one tomorrow. So anyway, catch you tomorrow. Enjoyed it today, Matt, Grant, Rusty. We'll see y'all.
Thanks, guys.